So I'm going to talk about FHA loans and how FHA loans can help, whether it's you or someone else, get into a home, the pros and the cons, the benefits, FHA loan limits, and how it can be a big benefit in getting people into homes with high price properties, as well as interest rates being higher, and some of the benefits to this. And one of the things, just out of the box, a lot of people think an FHA loan is for first-time home buyers, or they're only for certain areas. And there's that myth. Just this afternoon, I was out in public, and someone approached me that knew that I do mortgages and said, "Hey, I've heard that there's an FHA loan that could potentially help my family, and I thought they were only for a certain area, for a certain city within this county that I'm in." And I said, "You can get an FHA loan anywhere. It doesn't matter where you're at. You just have to look at what's called the loan limits." So what are FHA loan limits, and how do they work? So FHA loans are loans that are guaranteed by the federal government through the Federal Housing Administration, which falls under the umbrella of HUD, Housing and Urban Development, in Washington, D.C. And every year they set what's called the loan limits based on each county in the country. Doesn't matter whether you're on the West Coast from California to the East Coast of Massachusetts, whether you're from Alaska all the way down to Florida, everywhere in between, each county in the country has loan limits for every county. And each county has a different amount that FHA loans will be insured by the federal government, that banks will lend on a loan for each property that someone is, whether purchasing or refinancing. So the FHA loan limits, for example, Riverside County, California, the loan limits in Riverside County are $644,000. It doesn't matter if you're in Riverside, the city of Riverside, or Marietta, Temecula, Hemet, Menifee, or any other town or a county address. The maximum loan amount is $644,000 and some change for any property in Riverside County in Southern California. A lot of properties are higher priced than that, and you've got some properties that are lower. So the benefits to an FHA loan, and how do these loan limits, and how does an FHA loan benefit someone, whether you're a first-time home buyer or a move-up buyer. You've previously owned a home for a move-up buyer. So the challenges with a conventional loan is, with the high home prices and interest rates being higher, your maximum debt to income ratio is 49.9% for the decimal percent for underwriting guidelines. And this is a problem for some individuals that are trying to qualify, where they know they can make the payments, but their monthly payment for a property that may be a little more expensive for one property versus another, their debt to income ratio is going to be higher with a conventional loan for the guidelines if they're over 49.9%, and they're not going to qualify to purchase a home. So the flexibility that an FHA loan gives you is you can go up for a back end ratio of 56%. This doesn't happen that often, but when someone has other debts, such as an auto loan, credit cards, it could be student loan, or different things that we've got to be able to count in their debt ratios, we've got to look at what's the total expenses for the house, not just the housing expense, but the other expenses to calculate in the debt ratios. And this back end debt ratio, with an FHA loan, you've got more flexibility. And so if you're in an area where the FHA loan limits are whatever that county loan limit is, and you believe that you can find a house that's within that range, there's a lot of flexibility, not just the underwriting guidelines, but also right now the interest rates are actually better on FHA loans, and they can be more attractive for monthly payments than on a conventional loan. Now, here's the downside. FHA loans have what's called mortgage insurance. In case the homeowner, the borrower defaults, they can't make their payments, the bank is insured that they will be repaid in case the borrower defaults on the loan and they can't make their payments and the house gets foreclosed on, and so there's insurance on the payment plan, on the loan. So the mortgage insurance, this is the one downside for an FHA loan, that it lasts for the lifetime of the loan. The upside to it is it can be lower than conventional in some cases. Not every case. Sometimes conventional loans have higher mortgage insurance premiums and payments compared to FHA loans, depending on someone's credit score. So depending on what someone's credit score is how a conventional loan is calculated for the monthly payment for mortgage insurance. For FHA loans, it's a flat decimal percent, depending on how much money is put down for the purchase price. So if you're looking for some guidance, trying to figure out what's the best route to go, whether conventional or FHA, and you're wondering how should I figure things out, I'd be happy to help you, guide you along. I've helped hundreds and hundreds of people with their mortgage financing, getting into homes, restructuring their debt, putting them into better situations in life. I've helped a lot of people build a lot of equity. People are much better off that purchase homes. Their standard of living is much better. I look forward to helping you with whatever it is, and putting together a game plan so we can find out how to get you into a home, how to give you the stepping stone in life to give you a hand up to the next step. My name's Ben Garrettson. My contact information is below. Thanks for listening on the FHA mortgage financing today.